$438 billion in one quarter. 12 mega deals over $10 billion. It's pure boardroom FOMO.
FOMO? Come on. It's cheap debt and the AI arms race. If you don't buy an AI startup right now, your board fires you.
Oh, please. Half these deals are just software roll-ups wearing a fake mustache. I'm way more shocked by Keurig swallowing 96% of JDE Peet's.
Coffee and AI? The two things keeping bankers awake this quarter? Wait until we unpack this $20 billion biopharma feeding frenzy. The rundown.
$438 billion in one quarter. First quarter deal value is up 155% year over year. That's not a typo.
It's a 5-year high, Maya. 12 mega deals over $10 billion closed in 3 months. The boardroom FOMO is absolutely radioactive right now. If your CEO isn't buying an AI company, your board is probably asking why.
Well, if you're Merck, you're buying Terns Pharmaceuticals for $6.7 billion, which caps off a $20 billion week for biotech buyouts. Eli Lilly and Biogen were also out spraying money around.
It's a total feeding frenzy. Eased financing conditions plus looming patent cliffs means everybody is panic buying pipeline.
Panic buying is exactly it, but the software guys are busy too. Private equity firm HG just closed its acquisition of OneStream, $6.4 billion for corporate performance management.
Nothing gets my heart racing like corporate performance management. You just know some ex-banker at HG is updating his Hinge profile with that deal tombstone right now?
I guarantee it. Meanwhile, Intel is buying back a 49% equity interest in its Ireland Fab Joint Venture. I was digging into the filings on this yesterday, and the mechanics of unwinding that JV are actually brilliant.
Brilliant is a stretch. It's defensive maneuvering. They're just shuffling deck chairs on their manufacturing footprint, while the rest of the tech sector is out hunting for actual growth.
Oh, come on, Nate. It's incredibly smart capital allocation. You consolidate control of a critical European asset right when European dealmakers are outperforming their indices by 6 percentage points. North American acquirers are lagging right now. Intel gets to lock down capacity on their own terms.
Sure, but it doesn't move the needle like a real acquisition. Look at HIG Capital carving out Global Elite Group from Securitas. Aviation security? Now that's a gritty, cash-flowing carve-out. I love a boring business.
You just like saying the words global elite.
I really do. It sounds like a villain corporation from a 90s action movie.
Fair enough. But if you want a real villain corporation move, how about trying to corner the global caffeine supply?
Oh, you mean Keurig dropping the hammer this morning?
Exactly. Buying a 96.22% stake in JDE Peet's. Let's look at how they structured this new coffee empire. The big one.
$438 billion in 3 months. I had to refresh my terminal twice this morning just to make sure I wasn't hallucinating.
It's a staggering number. 155% year-over-year surge. And I swear, every single press release I read this morning manages to cram the word AI into the second paragraph.
Because that's what's driving this. 12 mega deals over $10 billion closed in the first quarter. Boardroom FOMO is at an absolute fever pitch. You've got CEOs looking at their peers and panicking they're going to be left behind in the AI arms race.
Okay, I'm going to push back hard on the AI narrative.
Here we go.
No, hear me out. Yes, tech is hot. But look at the actual structural drivers. Financing conditions eased up. Debt is significantly cheaper than it was 6 months ago. Calling HG buying OneStream for $6.4 billion an AI arms race deal is just brilliant PR. It's a corporate performance management platform. They do accounting software, Nate.
Fair, but you can't deny the psychological contagion. Once the massive checks start flying, everyone gets off the sidelines, which brings me to my favorite non-tech deal of the morning. Keurig Dr Pepper.
Ah, yes, the great caffeine consolidation.
Exactly. They just swallowed a massive 96.22% stake in JDE Peet's. They're tapping Rafael Oliveira to run the newly formed global coffee giant.
96.22. I genuinely love when they can't quite get to 100%. I spent 20 minutes digging into the footnotes trying to figure out who the holdouts are. There's always some stubborn voting bloc in a European holding company who absolutely refuses to sell their shares.
It's probably some guy named Klaus sitting in Amsterdam who just fundamentally hates K-Cups.
Honestly, Klaus might be onto something. But speaking of Europe, regional deal watchers noted European deal makers are actually outperforming their indices by 6 percentage points right now. North American acquirers are actively lagging behind.
Which is completely wild considering the biopharma feeding frenzy we're seeing stateside. Over $20 billion dropped in a single week.
Merck snapping up Terns Pharmaceuticals for $6.7 billion was the crown jewel there. Eli Lilly and Biogen were right behind them writing voices.
Reading this note from the street, they're pinning this entire 155% surge in Q1 deal value on eased financing and AI FOMO. 12 mega deals over $10 billion in 3 months. The boardroom panic is very real.
Right, but look at who is actually generating returns. Regional deal watchers just pointed out European deal makers are beating their indices by 6 percentage points right now. North American acquirers are actually lagging behind. So much for the Silicon Valley AI monopoly.
Oh, come on, you can't ignore the raw volume. $438 billion for the quarter is a 5-year high. And it's not just tech driving this. Look at the biopharma feeding frenzy. $20 billion dropped in a single week.
I read the filings on that Merck acquisition of Terns, $6.7 billion. Eli Lilly and Biogen are doing the exact same thing. It is purely defensive buying. They are terrified of patent cliffs, not innovating.
Defensive or not, the fees are fantastic. You have HG taking OneStream for $6.4 billion, Intel buying back 49% of its Ireland Fab. Everyone is restructuring or bulking up.
Bulking up is a nice way to phrase it. Even the upstate New York regional banks are getting in on the action. Ballston Spa and NBC Bancorp just finalized their merger, a staggering $1.3 billion in combined assets. Try not to let your Wall Street heart skip a beat, Nate.
Hey, $1 billion here, $1 billion there. Pretty soon, you're talking real money. It buys a lot of terrible boardroom coffee. Which reminds me, Keurig Dr Pepper just swallowed 96% of JDE Peet's.
A true global caffeine monopoly. But going back to that biopharma panic buying, you know the regulators are drafting subpoenas as we speak.
Oh, absolutely. We need to watch the regulatory fallout on this tomorrow, especially Novartis trying to push through that $2 billion Exalergy deal.
I also want to see if North American buyers can actually snap their losing streak as Q2 kicks off, or if Europe keeps outperforming. Spill the tea. Yanni and
I'm telling you, the smell of desperation in these boardrooms is overpowering right now. 12 mega deals over $10 billion in just 3 months. It's pure, unadulterated FOMO.
It's an AI arms race. They see that 155% year-over-year surge in first quarter deal value and just panic. But honestly, half of these AI capabilities they're buying are totally imaginary.
Oh, come on. You can't call it imaginary when the financing is actually there. Eased conditions mean they can finally pay for the hype. The money is very real.
Being able to borrow money for a terrible idea doesn't suddenly make it a good idea, Nate. I read the footnotes on some of these tech acquisitions. They're buying glorified chatbots at a premium.
Spoken like a true tech journalist. But fine, let's look at hard assets. The biopharma sector is losing its collective mind. $20 billion dropped in a single week.
The feeding frenzy is incredible. Merck taking out Terns Pharmaceuticals for $6.7 billion, plus Lilly and Biogen basically inhaling whatever promising biotech targets are left.
It's the Pac-Man strategy. Eat everything before your rivals do.
See, what fascinates me is the regional breakdown of all this. With all that US pharma and tech money flying around, North American acquirers are actually lagging behind.
Wait, really?
Yeah. European dealmakers are currently outperforming their indices by 6 percentage points. North America and Asia Pacific are just dragging their feet.
That's actually wild. The Europeans are quietly eating our lunch while US executives just scream about AI synergies on earnings calls.
Exactly. And speaking of quiet moves, did you catch Intel repurchasing that 49% equity interest in their Ireland Fab Joint Venture?
Ah, yes, the classic corporate undo button. Nothing screams strategic clarity like buying back the exact manufacturing footprint you just partnered off.
It's complete whiplash. But with all this aggressive maneuvering, you have to wonder how the regulators are going to react to this sudden explosion of consolidation.
Oh, they're sharpening their knives as we speak. which leads us perfectly into exactly what we're watching for tomorrow. Tomorrow's radar.
Tomorrow, I am obsessively refreshing the regulatory filings for Novartis. That $2 billion Excelergy deal is the canary in the coal mine for this whole biopharma feeding frenzy.
20 billion dropped in a single week. Merck swallowing Terns for 6.7 billion. The regulators are going to completely panic tomorrow.
Oh, come on. No, they will not. I read the Merck footnotes. The product pipeline overlap is practically zero. You are just projecting your old banker PTSD.
Hey, banker PTSD keeps the compliance lawyers employed, but seriously, tomorrow is the official start of Q2. I want to see if North American buyers can actually bounce back.
They really need to. European dealmakers are outperforming their indices by 6 percentage points right now. US buyers are just asleep at the wheel.
Asleep? They just closed 12 mega deals over 10 billion in 3 months. They are not asleep, Maya. They are just nursing massive AI hangovers.
Well, they better hydrate. The SEC drops new filings at 6 a.m. and we will be right here reading the fine print.